Best AI tool for finance in 2026? You only need one. In 2026, investors face an unprecedented challenge. The sheer volume of financial information is staggering. Every day, earnings transcripts, macroeconomic reports, central bank speeches, geopolitical updates, and sector analyses flood the market. The problem isn't access, it's processing. Most investors and even professionals spend countless hours trying to connect the dots, often reacting to headlines rather than making proactive, strategic decisions. That's where the power of AI truly comes alive. The right AI tool doesn't just summarize data, it synthesizes and interprets it. Imagine feeding dozens of earnings calls into a single system and instantly receiving a clear comparison of management tone, revenue drivers, margin trends, and potential risk factors. The most valuable AI doesn't replace your judgment, it amplifies it. It transforms complexity into clarity, allowing you to focus on decisions that truly move the needle. By leveraging a single, powerful AI tool, you can turn information overload from a liability into your greatest advantage. Let's watch. 1. Information overload is the modern investor's #one enemy. Every day, thousands of financial data points are released across markets, earnings transcripts, macroeconomic releases, analyst reports, regulatory filings, central bank speeches, geopolitical developments, and more. Most finance professionals spend enormous amounts of time digesting content, time that could be spent analyzing implications or making strategic decisions. In 2026, the winners won't be those with the most data. They'll be those with the best synthesis of that data. That's where the leading AI tool excels. It compresses large volumes of information into structured insights. Instead of reading 20 earnings calls, you can paste all transcripts into a single prompt and ask for a comparison of management tone, revenue drivers, margin trends, and risk factors. Rather than toggling between newswires and market data feeds, you can ask for consolidated macro briefs with sentiment analysis and forward guidance projections. What used to take hours now takes minutes without losing nuance. This ability to convert complexity into clarity is why the best AI tool isn't just a summarizer. It's an interpreter, and interpretation is what drives financial decisions. 2. Deep financial analysis without the heavy lifting. Most investors fixate on surface-level metrics, revenue growth, headline EPS numbers, or share price performance. Few consistently dive into deeper financial structures like cash flow sustainability, debt maturity risks, or capital allocation quality, not because they lack skill, but because it's time-consuming. The best AI assistant transforms this dynamic. When fed financial statements, balance sheets, and cash flow numbers, it can identify patterns that typically take analysts weeks to detect. It notices rising interest expenses, weakening free cash flow, margin compression trends, or shifts in working capital dynamics. It can compare these metrics across competitors, revealing hidden risks or opportunities many investors overlook. But the power isn't in the numbers alone, it's in contextual interpretation. You can ask the AI how a company's debt structure might fare in a rising rate environment, or whether revenue recognition trends suggest aggressive accounting. This level of insight used to require years of experience. Now, with the right prompts, even small investors can access deep analytical reasoning. That's not replacing human judgment, it's elevating it. 3. Scenario planning and risk stress testing like a professional. One reason institutional investors outperform individuals is not necessarily access to information, it's the discipline of scenario planning. Institutions regularly stress test portfolios under multiple macro conditions, recession, inflation spikes, rate shocks, currency devaluations, and demand collapses. Until recently, this kind of analysis required complex models and quantitative expertise. By 2026, the leading AI tool radically democratizes it. You can ask, how would my portfolio perform under a 2% jump in inflation? Or what happens if the next recession lasts 6 quarters? The AI won't predict exact future prices, but it will outline logical cause and effect chains, how earnings might be affected. which sectors historically outperform or underperform in similar regimes, and how correlations between asset classes could shift. This becomes a strategic advantage. You're no longer blindly holding assets. You're preparing for plausible economic regimes and adjusting risk exposure proactively. When investors run scenarios before markets do, they position themselves, not react to headlines. 4. Crafting smarter asset allocation frameworks. Most investors build portfolios on vague preferences: I want growth or I want safety. This is not strategy. Claude-like AI tools helps translate preferences into structured, rule-based frameworks. You can define your time horizon, risk tolerance, income needs, sensitivity to inflation, and desire for global exposure. Then ask the AI to construct an asset allocation model that reflects these goals and explain the reasoning behind it. You can explore variations. What happens if you increase international equities or tilt toward defensive assets during tightening cycles? This gives structure to strategy. It turns emotional reactions into systematic decision rules. Investors who rely on rules instead of gut instinct weather turmoil better and capitalize on shifts faster. 5. Narrative-driven investment research on demand. Professional analysts spend years crafting investment theses supported by data, trends, risk assessments, and valuation drivers. AI takes that to a new level. The best finance AI tool lets you turn a thesis prompt into a full research narrative, complete with drivers, risks, valuation context, and historical parallels. Instead of writing 3,000-word investment cases yourself, you can brief the AI on a concept or theme and receive a detailed, structured report tailored to your needs. And this isn't surface-level fluff. You can ask for key catalyst. Risk factors, competitive intensity valuation, comparisons, macro regime impacts. This elevates your research from instinctual belief to coherent strategy backed by reasoned logic. 6. Real-time monitoring and signal extraction. Markets move faster than human attention spans. By 2026, the best AI finance tools will constantly monitor data feeds, earnings surprises, policy decisions, geopolitical events, sentiment shifts, and more, and extract signals that matter. This places your focus on strategic risk management rather than information noise. 7. Personalized financial intelligence. For every investor, the greatest advantage of a singular AI tool is personalization. You don't need access to expensive data terminals. With the right AI, your research adapts to your goals, whether you're a retiree seeking income, an investor building generational wealth, or a strategist managing institutional risk. You only need one, and don't forget to like, subscribe, and stay tuned for more captivating content